Righty guys, so in today's video we're going to be talking about the Turtle Soup entry model. I've got a short PowerPoint, then we'll get straight into the chart showing you a few more examples. Now, people treat this differently. For me, I approach this through two different mechanisms. Now, firstly, the basic concept is this, right? The basic concept is that the Turtle Soup entry model basically means that you're buying or selling when a rate occurs. So as soon as a rate occurs, you're buying or selling and you're targeting the opposing liquidity. So it does rely on you having a strong bias that there is liquidity to target. And for me, the best Turtle Soup situations occur when the rate of liquidity exists within multiple PD arrays and the liquidity target is clear. So on the right hand side here, I've got a bit of a diagram just explaining roughly what it is. So you buy as soon as the rate of liquidity happens, but you're in some other type of PD array here, right? And that often happens before your market structure shift. Right now, Turtle Soups as well, as I'll show you on the next slide, you can actually have these as a part of an overall continuation of a trend. But have a look in this example, right? So notice in the example, we have a breaker block in blue and a bullish gap in green. So this last up close candle is your breaker because you rated liquidity. Now, you might say that's your Turtle Soup, but for me, I like to wait for further confirmation. So we've got our market structure shift. We've returned back into this breaker and back into this bullish gap in green. And then notice here we form all this trend line liquidity. Then price raids this swing low. You've got a clear buy side target, right? At minimum, you're going to take out this liquidity. And now you've got multiple PD arrays that should be supporting price. So my idea of Turtle Soup entry models is using PD arrays to your advantage and then using time to your advantage. So at this point in time, guys, we talk about macros. There's a macro from 250 to 310, and notice how that delivers price to the buy side targets. So when we're kind of talking about macros, when we're talking about Turtle Soup, time is always an important factor, but this is the general principle of how to execute using Turtle Soups. I'm going to show you two examples. So I'm going to show two examples in the charts of different Turtle Soups, different time frames, and how you can have high probability Turtle Soups that you don't have to just be gambling with, because you can't just buy or sell any random swing high or swing low. It's not how it works, and you're going to get wrecked doing that. But once you have PD arrays lining up and you have clear liquidity targets, you can execute off the Turtle Soup entry model. So let's get straight into the charts. Alrighty, so we're going to go through a few examples here, guys, and this is going to be the first one. I'm going to get rid of all these PD arrays just so I can explain what I'm talking about. Now, what you can see here is this, right? We've had this little rally down, and then we push back up, right? We've had some kind of shift in structure. It's like a V pattern formation. We've had some kind of shift in structure here. Now this, right, is the start of the Asian session. Some people trade that, but this will apply to all time frames. Now, notice here, if we mark out PD arrays, there's a few things happening, right? We obviously got this liquidity void and volume imbalance. I'm going to mark that out. That's our first PD array right here. I'm going to label that as just a volume imbalance. And then also notice that we've got a low, a high, a lower low, and then a higher high that breaks structure. You've also got these up close candles here, which are a breaker block, and they line up with an imbalance, which is even better. So I'm going to label these out too, right? So let me just label these out and then I'll extend it across. So these up close candles here, 1, 2, 3, that there is also a bullish breaker. So at this point, when price returns into this bullish breaker and then into this volume imbalance, you've got two PD arrays there supporting price. You've also got this order block here too. So if you were looking to take a Turtle Soup, you then need to ask yourself, okay, well, do we have a clear draw on liquidity? In this case, we absolutely do, right? Now notice you've got all this trend line liquidity formed, an accumulation pocket. I love to target those, and you can see how we trade through that, right? So essentially at this point, you're watching the market, we trade back down into a breaker, into a volume imbalance, plus this order block should be supporting price. That there's your opportunity to go long, right? As soon as you take out that swing low. You might be asking, well, where's my stop loss go? You know, where do I target, etc., etc. Let me show you. So there's two ways to use this. Number one, right? You go for a long position like this, right? Straight away, and your stop loss goes below two PD arrays, maybe 3, which is below this order block. You can do that if you want to. Or how you can execute with Turtle Soups is you can wait for 1 or 2 candle rejections to the upside and wait for a change in the state of delivery. So there are many, many ways to execute using Turtle Soup entry models, depending on how many probabilities or how many, I guess, confluences you want to have. So the first way would be to do that. You go for a long position like this, right? Straight away as we break through, you start buying some contracts. Now, the thing is, when you're scaling in, this is a perfect opportunity. Maybe you're scaling with one contract here, and then the next contract potentially once we create this inversion fair value gap, then you enter another contract there. So you can use the Turtle Soup entry model as a kind of basis for how you can execute the trade, and then you can scale in contracts as you start to see more confluences start to stack up, right? So this is personally what I'd be doing if I was in this trade, scaling into the contracts. Personally, I don't trade Asian session, but if this occurred any other session, I'll be doing it straight away. So if this occurred during London session, this occurred during New York session, I'd be executing based on this if there's a clear draw on liquidity, right? So now at this point, let me have a look. You've got your inversion fair value gap here. You've executed, say, one contract here, maybe another contract here, whatever your risk management is. And then once we've created this inversion fair value gap, well, your stop loss can get trailed up, guys. So you're constantly, right, you're starting here, your stop loss is quite wide. And then as you start to get more confluences stacking up, inversion fair value gaps created, you can put your stop loss below this low, because this low should be protected now. It's rated liquidity, and we've had an inversion, plus we've got liquidity to target. And you can see now, if you executed off this second trade, the second trade stop loss goes below this low, even just to this swing high here, you get at least a 1 to 2, and you know it should take that out. So that there's the first example of using the Turtle Soup entry model, buying the stop losses. Right, there's so many people here that are trading support and resistance. They're buying every time it bounces off this point, right? They're seeing this maybe as a wedge, whatever it might be. And you can see how we break down and we break back to the upside. So that's one example of using the Turtle Soup entry model. Let's go to the second example and spend a bit more time on this one. So have a bit of a look here, guys. Here's another example of using the Turtle Soup entry model. Now, this is taking advantage, right, of a key time frame, which is the silver bullet. So again, you need time to be in your favor. And if I mark out the silver bullet, it's from 10 o'clock all the way until 11 o'clock, right? So this here is your aim session silver bullet. So what's essentially occurring here, guys, is you've already rated this liquidity. So you've rated some London session liquidity, which is good. And then what happens? You're watching price. Now you might ask me, is that a Turtle Soup entry? Potentially, but why not wait for more confluences and wait for the market to generate more liquidity and then go for the Turtle Soup? That's what I'm trying to say. So at this point, we've rated that liquidity, right? We've had a shift in structure here. And then have a look what price does. It kind of has a small little push to the downside, but that is just generating liquidity above all these highs. Trend line liquidity, accumulation liquidity. Same with these relative equal highs here. So as soon as price retraces, and this is where you can use like a bunch of concepts together, as soon as price retraces here to a level of discount from this previous price swing, right, then you can place a buy order. So you're waiting for potential liquidity to be generated just above or just around that 0.5 level, and then as soon as we take that out, you can enter a long position right here. Or you can wait for that rejection candle, then enter here. Either way, your stop loss could be trailed as we start to respect those bullish PD rays. Now, you might be asking me, well, what PD rays do you have here that are supporting price? You've got the fact initially that we've taken out London session liquidity, which is time-based liquidity. So often if you're trading the AM session, London lows, London highs are good liquidity points, and once you take those out, it's a great opportunity to potentially have a reversal. Number 2, we're in silver bullet. Number 3, and I'll explain more about this in the next video, but we've got this candle here, which is a mitigation block, right? Mitigation block right here. So we've got a mitigation block, we've got a bullish gap as well that we've marked out in green there, so I'm going to make this purple. Plus we've just rated liquidity, and as we kind of mentioned before, if you grab this price swing, or even this price swing, if you want to use this leg, doesn't really matter too much, but have a look at where price returns to. So if we grab out these 2 points here, that there's optimal trade entry. Notice how price returns to that optimal trade entry here. So we've essentially rated liquidity, time-based liquidity. We had a market structure shift. We've now returned to a level of discount. We've generated this liquidity here. That's our Turtle Soup entry for the fact that we already have these other stacked confluences. And mind you, right, we've actually got a clear buy side liquidity target, right? So getting rid of all this, if you went for a long position straight away from here, where does your stop loss go, right? In my opinion, it goes below this swing low right here, right? You've got these 2 candles, which are an order block, the last 2 candles before a shift up. You've got this candle, which is a mitigation block, and you've got this bullish gap. That there's your 3 PD array matrix, right? If you wanted to really, be conservative, you could put your stop below that low, but it depends how you want to manage your stop loss, right? Now, if you just wait for a rejection candle, then you can enter from here, and your stop can go technically below this low, because that low should be protected considering we've just rated liquidity. And as you can see, right, partials or whatever can be taken at this swing high or at least moved to break even. And you can start to trail your stop loss up. Noting in this example, guys, that you've actually got all this trend line liquidity, relative equal highs, and all this liquidity to target from the upside. So you've got to have a clear draw on liquidity. It can't just be as simple as, okay, I'm going to buy any random high or sell, sell here, buy here. You can't do that. You've got to have a clear draw on liquidity. Similarly here, guys, like all price is doing here is generating more liquidity, equal highs. We've still got all this stuff to target. What's it do? It generates this liquidity. You can buy straight away from here. You can buy straight away from here. You can see how the price reacts there. It starts to accumulate. It has no willingness to go lower, right? So these are examples of turtle soup that, are a bit different maybe to what you've heard of, but are very practical examples, because if you just start trying to buy any low or sell any high, then your question might be this. If I did a turtle soup right here, how would I know it's not going to go down, and where does my stop loss go? Do I make it 20 points, 20 handles, whatever it is? Do I make it 30? Do I make it 40? There's too much fluctuation there. Whereas if you wait for PDRAs to be created and you wait for that liquidity to be generated, you can then execute a turtle soup based entry model, but have high probabilities going along with it. So this here is the second example. Hopefully that makes sense. And again, we're in the silver bullet here, so that increased probabilities and that time is on your favor. So this here is the second example of a turtle soup entry model, and we'll go for one more and then we'll tidy up this video. Alrighty, so here's the third and final example of a turtle soup entry model, and I encourage you to look at this on your own charts as well, get experience having a look at it. It's a more advanced concept, right? It's a more advanced concept, but have a look here, have a look at what's being generated, right? You've got these relative equal highs here in the markets, and we know what markets usually do, we take those out. So we've got a massive drawn liquidity here. Now I want to point your attention to this area, right? This area. In particular, this zone. And this is the example, right? I want to go into a bit more depth. This is the example that I showed you in that short PowerPoint slide at the start. But essentially, have a bit of a look at what we got, right? We've rated liquidity right here. So that there is your rated liquidity. We've got a market structure shift technically above, these swing highs right here. So that's your market structure shift. Right, so if I just make that on top. And we've got an up close candle right here being your breaker block. So you've actually got a breaker block and you've got like a unicorn entry model. So have a look, you've got a breaker block there in purple. In green, I'm going to draw out this bullish fair value gap. And this is a really nice example where you've got two PD arrays, right? Two PD arrays there. And the market generates this liquidity in those PD arrays to take out, only then to shift to the opposite side, right? So turtle soups like this are high probability because, guys, you've got more PDRAs stacking up with price. If you're just trying to buy any, random swing low and sell any random swing high, yes, you may get it sometimes if it's time-based liquidity, but not always, because you might take out London lows. You might be trading the AM session. You might take out London lows and still continue down. Same with the London session. You might take out Asian highs, but still continue up. So I prefer turtle soups like this because like this, you've got clear draws on liquidity and you've also got multiple confluences stacking up with price. So have a look. One PD array, your breaker block. Second PD array, this bullish gap. Third PD array, this order block. So as soon as we take that out, you go for a long position. Where does your stop loss go? Initially, right? Initially, you can go below this swing low here. Right, where do you target initially? This swing high, initially, right? Or you go to break even. If you enter off the rejection candle like this, then your stop loss can go below this low because it should be protected as we've actually rated that liquidity. And if you entered right here, you've got even further confluence because when we break past this price here, we've got a change in the state of delivery. So you see that down close candle, it's an order block. Right, that's obviously how we close, but the opening price of that, when we break past that and close past it, it's a change in the state of delivery. So you could close and enter right here on the candle close, stop loss below that low, right? Targeting this swing high at minimum or any swing highs above, right? And you can see how that process plays out. So the turtle soup entry model is varied, but it incorporates essentially buying stops, right? So you've rated a swing high, you're going to buy it or sell it, sorry. You've rated a swing low, you're going to buy it. That's the general principle of how the turtle soup entry model works. And this is a trade I took myself personally that I've posted in the Discord. Those guys there have seen that play out. So really, guys, practice this. If you've got any questions about the turtle soup entry model, let me know. But this is the basic functioning of the model, how you execute using the model, but using multiple confluences, guys. It's not, again, just to solidify the point, it's not buying any random swing low or selling any random swing high. It's a matter of finding the highest probability setups, and then maybe you've missed out on this initial pump up, for example, and you missed out on this entry. Maybe you wanted to enter here and you missed out on it. So you're waiting potentially, and if it does happen and you still got that clear draw on liquidity, then you can take that there, because all this is doing, by the way, is this. Do you know how many people, right, would be going long right here out of the bullish gap, the stop loss below that low? When price comes up a little bit, 1-to-1, for example, they'd be going to break even. All that's doing is taking out those people that actually trail their stop too early. So you know there's a lot of liquidity resting below here, and once we've taken that out, the market can then move in its original direction, which is to the buy side targets, and you get more than a 1-to-2. So regardless of how you had your stop loss, you're still going to get your 1-to-2, which is kind of like a nice risk to reward that you can kind of aim for. So again, if you like these types of videos in this format, let me know. Short PowerPoint at the start. If you've got any questions on this, or you want me to make a second video on Turtle Soup entry models, let me know as well. But those are the basic functionings of the model. And until next time, guys, I'll talk to you then.